to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars Fontin, and always you are watching Cycles TV, live episode today, every Monday, same time, same place. We want to discuss cycles, cycle analysis, respectively in financial markets. Today on the agenda, I want to discuss a special topic with you. So the focus of this episode is to learn how to pick the right cycles out of the spectrum analysis. The cycle scanner, and it doesn't matter, by the way, which tool you will use. If you use digital signal processing to detect cycles, you will always deal with a spectrum plot, which shows you different peaks. And the key knowledge before reading possible tops or bottoms and in your projection area is upfront. You need to have the right knowledge. How do I pick the right peaks out of a spectrum plot? That's the topic for today. If you're following this channel, I will use this framework ever and ever again. I will repeat it, but it's so important that the next 15 to 20 minutes is dedicated to the knowledge how to pick the cycles out of the spectrum. Right, so let's get directly into our cycle analyzer here on the screen. We will use the tools every member on the foundation has access to, and by using the cycle scanner, just let's use the S&P. Today it's not about building a projection and reading the projection. Today, as said, is more the usage of how to use this spectrum analysis from the spectrum plot. So I'm just picking the S&P as the basic understanding. And what you see here down below, this is the spectrum plot. So the basic setting is you pick the start and the end point of the data you take into account for the spectrum analysis, and you can tweak this to whatever data you want to have analyzed. You can use very long historical data from your data set, or you can use a shorter time frame. First important, before we nail it down to this specific spectrum, if you're interested for a current projection from the current past into the future, don't use too much historical data, because in regards to the current phase and the current length, the more historical data you use, the more you are averaging the length and the phase for your projection, which then in case is not really useful if you just use the average length of a 100-day cycle for the last 20 years on daily data. This might be good for a historical fit, but if you're just interested in the current phase, and if the 100-day cycle is today an 80-day cycle or 120-day cycle, you don't need 20 years of data. You might just need 3 times of the longest cycle you want to identify. So in case, if you want to reliably detect cycles up to a length of 300, I call it data points because it's independent from the time frame, you need around 900 data points for your analysis. That's the minimum. But that's then also sufficient to use this for phase detection and exact length detection if you're interested in the forecast area. So that's the first decision you need to make. How much data do you put in? The standard setting is designed just to use specific this data set. For sure, for longer term historical analysis, you need to add more data, but then in case it's not as reliable for short-term projections. So just going with the standard setting here, we see that the cycle spectrum here at the bottom now shows us the so-called peaks in this spectrum, right? And each peak, which is here plotted in the lower end chart, is a cycle which is present in the data we are currently analyzing. So what we see here on the x-axis is the cycle length. So up to a cycle length of 400 is scanned here. And this is the y-axis, gives us the amplitude which has been detected for the respective cycle lengths, which has been tested. So the cycle scanner scans all possible cycles which are in this data set, and then plots out the amplitude. So now as you see, or just from, they are then also shown here at the right, which is just a list of the peaks. Yeah, so just hovering over the respective peaks here will show you then or highlight in the table the numbers. So you see just from looking now at this spectrum, there are lots of cycles just using digital signal processing which are somehow in this data. So now, and that's now where the difference between pure mathematical data transformation is, and even if you think it's that simple, there's some pre-processing, there's some detrending already in the algorithms. But even though, and you can use other tools for that, you will always get back to the visual representation of a spectrum. And now it's up to you, it's up to the analyst to pick the cycles for your projection. And as seen here, there are lots now of cycles possible, which could be used out of this spectrum. But there are now some clear rules how to pick I call them dominant cycles. But more important is to understand the rules, how to detect a dominant cycle. So let's clear up some rules. First of all, you should look for the highest peak in regards to amplitude. Yeah, this is one parameter and one important parameter, the amplitude peak here. So this looks like a cycle with the highest amplitude, and then you can down to lower amplitude values here from the cycle. So, but that's not the only I'm reading here. A second important point, once you have the highest amplitude, is then the shape of the peak in the spectrum. And therefore, it's also important to have a look at the spectrum, not only a list of peaks here, which is on the right, because the shape of the spectrum gives you clearly some background of which cycles to pick and which cycles not to pick. So let's draw some rules here. One important point is the so-called sharpness of the peak, and the sharpness of the peak defines to the left and to the right how quick these increasing or decreasing sides of this buckle here go down again, and how far they go down back to the zero line here and here. So in that case, it clearly goes down a lot, clear to zero here, which is good. So the sharpness is maybe not perfect. It would even be better to see a shape like similar to this shape here. So if it would be even go sharper down to the left and to the right, it would even look better here. But even though there we don't have to the left, there is no cycle seen, and also not to the right. So the way this peak here is presented in the spectrum, this is a sharp peak, which is another important criteria. For example, the complete opposite to a sharp peak is this here. So this is by all means no sharp peak. And the reason for that is here from that peak, it just goes down to this level here. A sharp peak would mean that we will go on close to zero and then go up again to this peak here and then go down and go down here. So in that case, we would have two clearly separated cycles and two clearly peaks in the spectrum here. But this visual representation here is the complete difference to that here. So here, this is okay. This is a sharp peak. This is not okay. So you can just skip these two peaks here. So this is rule number 2. Rule number 1 is look for a high amplitude. Rule number 2 is look for a sharp peak in the spectrum based on the rising and declining sidelines of this cycle here. So for example, in this spectrum here, this also qualifies for a sharp peak reading, yeah. This also qualifies for a sharp peak here. And then this one is not as sharp. These two are also not as sharp. And then here down below, I mean, the amplitude really falls off a cliff here, so they are maybe not perfect. So by just using the two first principles, amplitude and sharpness, you would pick this one, maybe this one here, and this one. So based on these three rules, these are the guidelines to pick. The third important rule after amplitude and sharpness is the plateau size of a peak. So the plateau is similar to the sharpness of a peak, but you can have, let's say we have this very nice up-moving and down-moving slope here at the sides of the spectrum, and then there's really nothing to the left and to the right, but you could see cycle peaks which are huge plateau. So maybe it's looking like this one here. So, and then we would have the peak maybe here in mathematical terms here. So in that case, it's clearly separated. So you could argue this peak is sharp, yeah. But we have a huge plateau building, which makes it more or less impossible to really pick the right length setting here. So, I mean, mathematically, the top of this peak could be filtered, yeah. But as we have the plateau size from left to right is so wide that you even can't trust a peak here. And even though if it's rising and declining very sharply, if you see strong plateaus, that's a bad indication. So shapes with the very sharp, very flat plateau building shape in the spectrum should not be used. So that's the third rule. First rule, amplitude. Second rule, sharpness of the rise and the declining area of the shape in the spectrum. Third criteria, you don't want to see plateaus. You want a clear peak here with one clear indication of the length and not these kinds of plateaus here, right? So that's important. So that's the third rule. Avoid building of plateaus. So now we have two additional, and now it gets more complicated. So the first three are very easily to detect from just looking at the spectrum, right? So the next ones are, even though important, but maybe not as easy to see in the first place. So this is called the so-called prominence of a peak, and the prominence. So this is the amplitude, yeah, from bottom to the top. This is the amplitude. Yeah, you can read it here. That's the amplitude of the cycle. The let's pick a different color. The prominence of a cycle is similar, but not the same. The prominence is calculated from the bottoming area of this. I need to make it from the bottoming area of this decreasing left shape of this cycle. So this is the prominence of the cycle. Yeah, it's calculated just from the offset of how far this falls down. So for example, here the prominence would be this reading here, while the amplitude of this cycle is this reading here, right? So that's the amplitude, and the blue one is the prominence. So the prominence gives you a better reading of the amplitude separation in the spectrum. Yeah, because the higher the prominence is, the more you can trust the amplitude. So, and for example, here it might look as a very high peak here, but if you just calculate from this position here, the prominence is much lower than the amplitude. So it takes account how far it is separated in the spectrum. That's prominence. Another measure is the width of the cycle length. Cycle length measured at the half of the prominence. So when you take this, then here is half of the prominence, and then you measure from left to right. So from here to here, this is the so-called width of this peak in the spectrum. And now you can calculate the prominence to width ratio, which you want to have as high as possible. So you want to have a very, very long prominence compared to the width here. So if you divide the prominence divided by width, it gives you a kind of scoring for how the visual representation of the peak looks in the spectrum. Bear with me. I will, at the end, you will get a small surprise, even though you might follow some more complex explanation. But that's kind of bringing the visual representation, which I explained in the 3 rules, now more into mathematical terms. So prominence and width is very important, which is not so easy to spot. But is rule number 4 now, to have a high ratio between prominence and width of these cycles. So that's rule number 4. Rule number 5 now, we bring the so-called cycle strength into play. The cycle strength is another different measure, which is shown here in the upper right of the table. So the strength can be seen by strength score, which is listed in the table here. It's also not as easy to identify in the visual representation of the spectrum right at the start. So the strength score gives you the information about how much amplitude movement is related to one step ahead or back in the data point. So if you progress one step regarding to your time frame, so if you have daily data, so how much does this cycle influence the overall amplitude of your data set if you progress 1 day into the future? Or if you have 1 hour data, then the strength tells you how much influences this cycle length the amplitude of the data set, so the price movement of the data set for each hour. So because you can have a very high cycle length, so which with a so-called high amplitude, but then it's important how much does this individual cycle with the length of here, I mean what we have for a cycle here with the length of 282 influence the amplitude of the price per day. So even though it looks like the most important cycle here from the amplitude, but it's more important, and because if you do your projection, you're interested in the near future, maybe not the long-term future view. So, and from the near-term perspective, you want to get a clue about how much does this 182 day cycle influence the price movement here on the chart day by day. And that's the cycle strength. And you see this cycle is even very, very down below at the bottom of this table. So even though the amplitude reading, it has a high amplitude, the cycle strength, so divide the amplitude divided by cycle length, then you come to the strength is very low. So this cycle here, and on the top of the list is the cycle with the length of 82, which is listed here. So the absolute amplitude of this cycle is much lower, But if you divide here the amplitude around 80, then with the cycle length, so it's a normalized strength value, you see that the influence of the 82-day cycle on the price movement per day is much higher or larger than the influence of this long-term cycle. Yeah, and so you get a relative feeling about overall, if you're interested on the specific time frame you're analyzing, what is the most dominant cycle influencing price movement step by step moving now forward. And that's not always the cycle with the largest amplitude. So therefore strength, it's not the only, but strength is the fifth criteria which you need to take into account when picking a cycle. So cycles with a high strength score are important. In the way how we present the cycle spectrum, which is unique by the way, you can identify the strength by the size of these triangles. If you watch closely, you see that this triangle here at the cycle length of 282 is very small. And the size of the triangle here at the cycle of 82 is very large, or the relative comparisons you see here. So therefore, this is a very unique visualization of a cycle spectrum, because I mean the shape you can see visually. The cycle strength is not in a classic spectrum, but here you have it. So the cycle strength is the size of the triangle, and look out for large triangles, rule number 5. So, and now finally rule number 6, and then we have all our 6 rules together. Rule 6 now is another measurement, is the so-called Bartel's score. Bartels has invented the so-called test for statistical significance. So besides the digital signal processing, which works on the frequency spectrum or the frequency domain, so the time domain, checking for repetitive patterns and frequency, cycle length, the statistical test is something different. So once we have identified cycles, so the list of cycles, we can calculate their statistical significance in the underlying data set. And testing for statistical significance is something different than digital signal processing. So we get an additional measurement which can guide us through, should I pick this cycle or should I not pick this cycle? So statistical significance, what does it mean? So say, for example, we have here identified our cycle with a length of 282 days. Or let's say this is more dominant here, the cycle with a length of 82 a cycle's length. What does statistical significance now mean? Yeah. Imagine 2 situations. The cycle length of 82, for example, could be very prominent for one repetition of this cycle in the current past. And then in the longer history, so even in these 800 days used here, maybe the repetition or the amplitude of this cycle was very low. So if you just read this data set, it has repeated one time in this data set with a high amplitude, and maybe in the early days of this data set, the amplitude was very low of this cycle. So it showed up in the spectrum. It showed the spectrum analyzer has detected this cycle, but it just repeated one time with a very high amplitude, while the other times the amplitude was maybe not so high, just simplifying the explanation, which means that the Bartel's score will be low. So if you want to have significance that this cycle, for example, was there the whole data set with the same large amplitude, it will result in what we use here is a high Bartel's score. So it's not the Bartel's value. The Bartel's value from the mathematical calculation is exactly the opposite. We just put it here vice versa to make it easier. So the Bartel's score, what you see here in the spectrum, means that the higher the Bartel's score, the more significant this cycle is in the overall data set. So not just the detection of the frequency, it's the how reliable, how balanced, how standardized this cycle was in the whole data set. And if we have a very stable cycle throughout the whole data set, same amplitude, same length, same phase, repetitive all the time, then you will see a high Bartle score. And on the other hand, if you see one huge peak of this cycle in the data set with then lower amplitudes at the end and the beginning, maybe a slightly different length variations, then the Bartle score will get really low. So the spectrum will identify it. Yes, the cycle is there. Has it been continuously repeating in the data set? Maybe not. So a low Bartle score. So you will look out for cycles with a high Bartle score, high statistical significance in the data set you're analyzing. So that's rule number 6. So maybe it does not sound easy, but these 6 rules are the key knowledge you have to have in mind when now deciding from this spectrum which cycles should I pick to build my composite, to build my projection cycle line, which is the most important. And I think this knowledge is even more important than the cycle detection on its own. And if you now look at the historical past, so for example, the Hurst cycles model, they didn't have these kind of rules, so they just used nominal cycles model. So the Hurst nominal model, for example, was just a simplification because they just didn't had this mathematical analysis of a shape in the spectrum, digital signal processing, statistical significance. So they just had the opportunity to run all these mathematical signal processing tests, and they just simplified their models in just what they observed in the past. They put it in kind of nominal models. So you can follow this approach from the past, which is for sure a good idea. But in a modern world, we have even better instruments, which I try to explain here. So the spectrum analyzer gives you the visual information. Now on top, with these clear rules, 1 to 6, you now have the knowledge at each spectrum to look on. And it doesn't matter if it's a 5-minute cycle spectrum, a daily cycle spectrum, or a weekly cycle spectrum. Always go down from rule number 1 to rule number 6. Pick the cycles, and this will bring you down to a list of 1 to a maximum of 3 cycles which should be used. So out of this spectrum here, as I easily explained here, there are just some peaks to follow. And if you have these rules within your brain, so you even need to become awake at night. Yeah. So once I wake you up next night, and then I show you a spectrum, and you just need to look at it and pinpoint cycle 1, cycle 2, cycle 3, because this knowledge needs to really become your daily routine, your hourly routine, to visually spot important cycles from a spectrum based on these 6 rules. Yeah. So, and I mean, now it's recorded. You can review it. I think you should write it down, and then take your rule set. And now the big surprise. If you took it up to here with me now, I think for 30 minutes, very scientific, hard stuff to talk about. But we need to talk about that. We are the foundation for the study of cycles. So for every projection, these are the underlying facts. Now we go even further. We want to bring this to the screen to you. We want to make it easier for you to detect the dominant cycles. Therefore, we are starting to embed routines. Call it first kind of artificial intelligence, that the computer is able to interpret and read these rules. Wouldn't this be crazy? So instead of us as humans with our eyes and our brain looking at a spectrum and then making what's the prominence, what's the width, how is the separation in the spectrum, which is quite important, and it's not easy to put this into simple mathematical rules, we have started to teach a computer reading these rules. Yes, and the first version is ready here for you, and I will show it to you. That's why you need to stick at the end with me here. Maybe some have left already, but then they will miss it. So it's not for everyone right now. We start to roll this feature out with our professional clients. So, and then in the next days, you will see it even come into the basic and analyst membership. So there will be a new setting. I need to share it with you. There will be a new setting in the cycle scanner, which is called Dominant Peak Finder and Classification AI. Yes, you have read it right. The first time we introduce the first kind of artificial intelligence to interpret these 6 rules from a machine. In simple terms, you just activate it, which means that these 6 rules I've just tried to explain you are now taught to a machine. You update it, and more or less like some kind of magic, you see some circles appearing around the peaks. Yeah, and in this spectrum, there are only 2 circles around all the peaks. And these circles are also highlighted by a green indication in the list of the table here. And I need to scroll down. This one is also highlighted. So, as it took me 30 minutes to explain you the rules and tell you why this cycle is important and the other one is important, taking into account the width, the prominence, the sharpness, the strengths of these cycles, and then filter out the important ones. These 2 cycles are picked by our new algorithm and identified as dominant. And it's a new reading of dominant. It's in the early days, we just used strength. So now these routines take into account all 6 rules I outlined here. So even if you don't have the knowledge in the future, which I've explained, I really hope you will have it as a human, because you need to understand what all these algorithms are doing. You can just pick these 2 ones which have been circled, and this will bring you a composite just based on these 2 dominant cycles, which you just can see, and it has nothing to do with backtesting, curve fitting, or whatsoever. So the rule set, which is picking the cycles from the spectrum, just have to do with these 6 rules. So sharpness, plateau building, amplitude, strength. So it does not take care how good a composite fit would correlate to the original price data, because this would be curve fitting, which will not be useful. I mean, we could use curve fitting to find a combination of cycles which would have a good fit to past data. And I think this is what a lot of others are doing. I mean, you can curve fit out of this list of 20 cycles something that would look good in the past in regards to mathematical correlation. But it has nothing to do with really picking the cycles which are important based on cycle analysis. So the 6 rules I try to explain here. And even better, by just picking these 2 cycles which have been identified as dominant, without anything taken in account if it will correlate or not, you see how good these 2 cycles have been in explaining the past. Just two cycles, picking out of these 20 cycles, 2 cycles based on visual shape. The 6 rules I've outlined with have nothing to do with how this composite would fit to past data. And there you have it. That's really the next stage of cycle analysis. Having computers and algorithms helping us reading a spectrum, not doing curve fitting, not doing back testing on the profitability of buying and selling different cycles. This is curve fitting of cycles into whatever. This won't work. We want to do real cycle analysis, and we want to use computer power to identify the real cycles based on the knowledge of cycle analysis. So, I'm really going out of my self here. But once you have activated this, and please bear a little bit with us, it will maybe take the next month to roll it out to all users, you can for sure save it here in your profile. And then once you go to your dashboard, you pick a different cycle here, you are right from the start, it's there. Yeah. So in that case, you see it's picking these 1, 2, 3, 4. The other cycles are skipped. Yeah. So it's just with blink of an eye, you get all the dominant cycles based on these 6 rules with this visual rule set on the cycle spectrum picked here. Until you have it automated, maybe we should do a test up front, so you will only get the feature once you have passed the test to ensure that you really understand what's happening here. Yeah, because making the click later on is easy, but I think at some point in time, yeah, you will show up and then it will come the question, oh, what is the green underlying coloring mean to me? And then we have a lot of support tickets, and then in the support they get a headache. Oh my God, these users, they just don't know what they're doing. So maybe we need to introduce a test so that you upfront are able to repeat the 6 rules. And once you can name these 6 rules in a test, then you get the features activated to avoid support tickets at the foundation. But now I'm just kidding. But we need to find a way. You know, the more complicated the stuff will become, so kind of artificial intelligence, at some point in time, you will not understand what the computer is doing. And that's the risk with all artificial intelligence, that if you do not understand why something has been selected as dominant, I mean, you can maybe pick it and trade it, but that's not our approach here at the Cycles Foundation. We want to ensure that the knowledge why something is picked or not picked or decided in regards to cycle analysis, the background and the reasoning should be understood, because we don't want to sell black box solutions highly priced. Maybe we could. No, we want to have the knowledge out in our members and then provide the specific tools to apply it. That's for today. So I will now take a look at your questions. But please be, I will not do any projection today. I just wanted to have this knowledge, and I want to also have it documented here so you can go back to this video at all points in time in the future and to cross-check what are the important rules to pick a cycle. Even if the feature is not there, you need to bring this into your brain to, from a visual perspective, you look at a spectrum, you have these 6 rules embedded in your cycle analysis brain and can just spot on these cycles are there. So give me a second to check your questions. And today I will just pick questions related to the subject I have. Yes, and that's a good question, Elliot. I can't bring in the question here, but I will read it. I didn't see you using the dominant cycle DC for quite some time. In older videos, I was watching the dominant cycle always played an important role. Has this changed? So no, it has not changed, but we changed the way how to detect the dominant cycle. So therefore, during the past months, I've been working on teaching the computer to pick the dominant cycles based on the rule set instead of the previous algorithm. So the previous algorithm, and this is not updated yet, so you have the option to activate the dominant cycle by clicking at DC. This will bring up the dominant cycle window, and this will also plot the dominant cycle here automatically. But this is and is still based on the very simplified rule set. So just 1 out of the 6 rules was used to identify this dominant cycle. So now, as I have updated already the intelligence here to pick these 1 to 4 dominant cycles, the window where the dominant cycle is shown will also change in the future. And that's why I've not taken reference to this dominant cycle in past videos. So Elliot, the simple answer is the dominant cycle will become even more important in the future. I've just worked on new rules to identify it. And by the way, you see maybe these 4 ranked cycles here in the list here. They have also a ranking. So there's clearly the number one dominant cycle, which is not shown here, and then you can drill down even from a ranking. So Elliot, the dominant cycle will become even more important now with the improved rules. You will see changes in the platform also. Nico, also good question on the, I think I need to change first on the S&P back again. Your question is related to the S&P chart I showed. So here it is again. And the question you had in the chat, Nico, is half peak at 400. And this is what you're referring to. So you're referring this, the spectrum ends at 400. So this, the ending peak at 400 on the spectrum, and is suggesting that there is a slightly longer than 400 cycle that may be worth using it. Yes, you're absolutely right. Looks like there is a cycle, I don't know, 450 or around 500 days, which is not shown here, but from the shape of the spectrum plot up to here, it looks like that. So to identify a 500-day cycle, for example, you need to switch to a weekly data set and then recalculate a 500-day cycle. How much week would this be? So divide 400 divided by 5 trading days. So it's a 10-week trading day cycle. And a 10-week would represent 100 week. Yeah, a 100 weeks trading day cycle would be similar to a 500-day cycle. So then in a weekly data set, you can look out for a peak at around 100. So that's the way then how to detect cycles longer than 400 days, recalculate them into weeks, switch to a weekly chart. In that case, I would like to see a peak at 100 weeks. So 100 weekly chart would then be kind of 500 days on the daily chart. And yes, but your reading is right, Nico. Okay, other questions. Let me quick. Yeah, William, your question related, would we need to have the advanced subscription to individually produce the 2 or 3 dominant cycles as individuals and overlaid on the same graph? Yes, the feature. So I mean, first of all, you can identify these cycles visually by the rule set 1 to 6 already, and you can pick the cycles 1 to 6 already as composite cycle in the spectrum. So there's nothing which blocks you today, William, to apply the rule sets and then to produce a composite out of the 2 or 3 dominant cycles which you identify based on the rules. The automated feature, which uses first kind of artificial intelligence to combine these 3 rules from a computer looking at the spectrum, which I showed you with the circles around, will be rolled out to higher level subscription, not the basic membership, in the coming month. Okay? And the main reason is it requires even more understanding. So if we start this with the basic membership, we will overload a starter on cycle analysis. So that's the main point. So while your cycle analysis knowledge grows, you can decide if you want to have it automated or you want to still do it manually, and then you can switch the subscription. But the knowledge comes for free is always wrong, but I'm here to teach you. Visually you can do, you can pick the composite. And yes, having it automated as shown will come then with higher level subscriptions. Yeah, William, that's the composite. So you're right. You can stack up these 2 cycles. I think I showed you in how I did this with the 282-day cycle and the 82 cycle. You select both, and then you could get a sum out of both cycles. That's the composite plot we showed. So but therefore you don't need a higher subscription. That's for every member possible right now. Yeah, Daniel, now it comes to the interpretation. So your topic, it all points to recession in 2024. I do not expect the bottom to occur in 2023. That's now the interpretation. Once you have these dominant cycles, you should make your projection. And then I would would always recommend use a secondary or third data set. So for example, use a weekly data set of the same data and see if the results, so of the dominant cycles on a weekly data set, will bring you to the same projection as dominant cycles on a daily data set. Maybe then use the S&P, the Nasdaq, and maybe some other main indices. See if they align or if they are in disagreement. So that's then how you nail it down if you can trust the cycles model or not. Elliot, yeah, we never talk about cycles shorter than 30 days. Yeah, to be honest, on a daily chart, I think it's too short. So think about a cycle of 30 days repeats every 2 weeks. Yeah, so which means that every 2 weeks you will switch from long to short, and the price movements which happen in 2 weeks, if overlaid with larger cycles, are at least on a daily chart not tradable. If you want to make use of 30-day cycle, you need to switch to hourly or 2-hour charts. Yeah, but then you need to change your time frame. So looking at a daily time frame, I think it does not make much sense to use 30-day cycle. If you are looking at hourly, 2-hourly, 4-hourly charts, then you could make use of it. So that's then the perspective of the time frame you're using. Okay. Yeah, Daniel, and also for sure, I mean, cycles are just a theoretical interpretation of whatever forces apply. So we are not questioning what's the reason for a cycle. So that's where we stop in most point in cycle analysis. We just can reveal there is a cyclic behavior seen in the data set. And then we do a theoretical interpretation of this cycle, which applying sine wave and this classical shape of cycles. And right, the stock markets cannot fight these cycles. I mean, there's a lot of noise. There are a lot of one-time impacts which affect that. So then you have your cycles. And I think, Daniel, you also outlined it. Be careful with analyzing individual stocks, because individual stocks are just a small fraction of the overall cycles which are applied to sentiment, behavior, risk analysis, our decision-making process. Individual stocks are often more managed in terms of certain price movements. And if they are individually influenced or managed just by individual impacts, events, manipulation, whatever, it's so-called noise. And if the noise ratio is too high, which is often the case in individual stocks, you need to be careful with cycle analysis. Okay. Okay, so I think that's at least for today on the subject. I see you have different questions on different markets, but today is not a focus on markets. Otherwise, we will run 2 hours for today. Let's then meet next week, next topics. I think we need to wrap a session into one topic. Otherwise, I can sit here for days talking about cycles. So I would say thanks for joining me today, being part of the Cycles Foundation. Please like it. Please tell your friends. We are here to educate the basic underlying principles of cycle analysis, make it easy for you to understand cycle analysis, provide you then some tools to apply it on your own data sets. I want to see you next week, next Monday, same time, same place. Hope to see you here live again. Thanks for today. Have a nice week. Stay safe.